next thing we need to talk about is the trailing stops. So trailing stops, now we're talking about once we're in a trade and the trade is heading in our favour, let's say our initial stop loss was not hit. We now need a method to lock in profit as the trade heads in our direction. One thing I think that's key to note here, I think everybody, if they ask themselves this question, you know, how many times have they sold too early? Everybody at one point in time in their trading career has sold you know, to crystallize a profit, and then the trade has continued and you kind of kick yourself and go, you know, why did I sell too early? And I think, again, this comes back to that idea of, to be successful trading, you actually need to do what is counterintuitive. The intuitive thing is to sell your position to crystallize that profit. The counterintuitive is to let your profits run. And when you're in a winning situation, you want to become risk-seeking. And when you're in a losing situation, you want to become risk-averse. It's almost like you need to flip on its head what the intuitive action is. And I think that's where trailing stops come into play. I think having a look at this little chart here, I want you to understand, and the key point I wanted to get across here is, at least for me personally, I know there is a time and a place for setting profit targets, and if you're trading very short-term trading systems, you might look at setting profit targets depending on the time frame that you're looking to trade. But the fundamentals of good trading and on longer-term trading, you really do want to let your profits run. We've all heard it before. So how do you let your profits run? You use trailing stop losses, and it enables you to lock in profit as the share price moves up. Mindful of that, you won't be able to pick the top, and I think it's valuable for the listeners now to accept the fact that you're not going to have that perfect holy grail system that's going to get you in at the bottom of the trend and get you out right at the top of the trend. It's best to wait, and the way trailing stop losses work is for the stock to come off the peak. When it comes off the peak, you exit and then go, oh, the stock is starting to turn now I'll look at exiting. So the way in which it's calculated, you can use very similar methods that I talked about before, and on the next chart I've got that. So more on stop losses. How is it calculated? What you need to look for is the highest price since entry. So when we look at calculating our initial stop, we go for our entry point, and then we subtract whatever our stop loss or our initial stop is from the entry point, that stop size. When we're talking about trailing stop losses, it's calculated from the highest price since entry. So as the trade progresses, you go, okay, well, what is the price at the highest price since I entered in? And I've got an example that I can show in a moment. But what is the highest price since I entered? And then you can most people, what they'll do is they'll apply the same calculation method, be it a percentage or an ATR or technical. To be honest, I think for trailing stop losses, I'm not such a fan of your technical. I just think there's too much room then subjectivity to come into play, because once your money is in the market, you get a lot more emotional, and I think especially in trailing stop loss positions, that's the point at which you're in profit, you want to have a more automated approach. So you could look at ATR or percentage stop loss, or the one that I use, the lowest low stop as well. There's a few different ways that you can do it. I just wanted to give you guys a little bit more of an advanced tactic as well.